heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, full chip coverage as TSMC earnings jump, but China risks remain for the sector.
Plus, Apple makes plans to license more Hollywood films for its streaming push.
And Bloomberg Intelligence breaks down the odds of a TikTok ban under a Trump presidency. We bring you all the details, but first, the details of this market. What a roller coaster we are on today. Nervousness remains. Look, we had the worst sell-off in the chip sector. I'm looking at the SOX, of course, the semiconductor index. It had its worst day yesterday since March 2020. Today, we start to rebound, we fall back lower, we now bounce back up again, but only by 0.5%, Ed. The risks remain about what happens in terms of China, US geopolitically, and Taiwan. Not enough, really, to be pushed back against some key earnings that you're looking at.
Yeah, there was a strange sort of pivot in the market in the last hour or so, and TSMC followed the market, the world's biggest contract chip manufacturer. Overnight, it raised its revenue outlook for the current period to a sum that was above analyst expectations, but they also reined in their capital spending plans, or the range that they gave, which gave everyone a lot of confidence, right? Discipline in the midst of uncertainty. There has been lots, we've reported on this program, about former President Trump's comments about his intentions or attitude towards Taiwan, TSMC being the sort of jewel of the crown in Taiwan's technology sector. That's had an impact on the market, but some choppy trading that we're still trying to make sense of.
And we can try and make sense of it with our own analysis now. We want to talk about the China risks. With the Biden administration, as you mentioned, Ed, really considering more trade restrictions. Bloomberg Intelligence out with a note saying this, along with Donald Trump's own comments on defending Taiwan, or not defending them earlier this week in a Bloomberg Business Week interview, could be, quote, beneficial for regional manufacturers in the US. I'm talking Intel, Global Foundries, Micron. Bloomberg Intelligence analyst Kunjan Subani is with us. You authored the note, and just dissect for us a moment how much geopolitical risk you think there is affecting some of these names that do have exposure to China.
Yeah, at this point, it's more of a headline risk rather than a fundamental risk, right? It's speculative at best, so we don't know how much to quantify. But for context, it's important to understand the run that SOX has had, right? Especially these high-flying AI names. It seems like almost nothing but positivity has been priced in. So I think this sort of, any sort of a roadblock, even if not quantifiable, sort of seems like a good opportunity for folks to lock in their profits and sort of the valuations to take a breather. Beyond that, the China risks have been there for the last 2 years. We have seen sanctions getting increased over time. But when you look at impact in terms of fundamentals and revenues, it's mainly been one or two key large players that have seen the impact. So again, the response to this news with most of the sector reacting like that seems more of a, again, headline risk at this point.
You note in your research that these are headwinds for fabless names, but the other name you linger on is, of course, Intel. And I think yesterday in the program, we were trying to understand the logic here. You know, Intel is trying to grow its own business of being a contract manufacturer for third parties. If something happens politically or in China or in Taiwan, is Intel the only alternative, the only name that would benefit directly in that line of business, Kunjan?
So you have to divide the manufacturing world into the leading edge, which is really where your AI chips and smartphone and PC chips get manufactured, and the lagging edge. You know, in the leading edge, there's really three names that come to top: TSMC, Samsung, and Intel. And Intel's main push has been catered around to really leverage this risk point that, hey, if something were to happen in Taiwan or TSMC, we would be sort of your insourcing champion here in the US. So definitely, you know, such news do benefit them. Again, this is not something quick. You cannot turn off TSMC tonight and turn on and take all the capacity at Intel. But in the long term, still increases, you know, in your risk models, still makes you favor regional manufacturers like Intel and Global Foundry. And speaking of the lagging edge, I think we have a lot more options in that area because a lot of US integrated device manufacturers have their own lagging edge capacity. So there's less reliance on Taiwan in that end. But yes, in the leading edge, Intel in terms of US and Europe.
I asked that question because for the second time this week, Intel's up more than 5% in a session where some of the other names, TSMC being one, are under pressure. Bloomberg Intelligence analyst Kunjan Sabani, thank you. Let's bring in Amy Selico now, principal analyst at Albright Stonebridge Group, and let's discuss the impact of potential trade curbs, expansion of trade curbs, and Trump on Chinese-American relations. I mean, Amy, the chip sector is absolutely in focus right now. Just respond to what you heard from Kunjan there on their thesis on geopolitics and who may or may not benefit in a Trump presidency.
Well, I think it is really early to say, and I think that's why we're seeing so much volatility, because while we have a sense from Trump himself, from his vice president, from his top advisors, how he looks at competition with China, the prescriptions that he will use really are unclear to date. Based on what the Biden administration is doing, we are seeing the potential for more curbs on American and non-American semiconductor products, particularly hardware, going to support China in increasing its focus on technology self-reliance, a key theme coming out of the third plenum. That is what we're hearing, that Xi Jinping is saying we need more indigenous innovation, we need technology to help us build our own semiconductor industry, because we cannot rely on an uncertain geopolitical landscape, given uncertainty in the United States and in Europe, two key suppliers, and of course Japan, of this technology hardware to China. As a result of that, of course, American, European, Japanese hardware providers of China's semiconductor, global semiconductor manufacturing are being pressured to restrict what they are going to continue to sell and service in China. That's where so much of this uncertainty is, because the question of how, what are the restrictions? Will the United States be successful in negotiating with the Dutch, with the Japanese governments, to really expand restrictions on what can be provided to China is
Amy,
the key.
How much do you believe that the threats will become reality? How much do you think that the Dutch and the Japanese will curtail servicing technology that already exists in China?
Well, I think there's going to continue, of course, to be American industry pressure that not they alone face those restrictions, Caroline. And so while, of course, U.S. industry doesn't want to see more restrictions on what they can sell to China if there is not a direct national security concern, they right now are unfairly competing against Japanese and Dutch companies that are continuing to sell to China. And so, yes, I do think that there's going to be more pressure to expand those restrictions. I do not think what we were rumored to be hearing about, that there was going to be a massive expansion, is going to come into play. Certainly not in the Biden administration. I think there will be incremental steps to restrict certain companies in China from receiving more semiconductor hardware products in the near term. The Trump administration, which is what we are talking about here, is the big unknown.
Amy, it takes two to tango, right? And you don't have a crystal ball. But if you take the EV industry as a parallel example, what China did was give large volume subsidy, but it had a limited shelf life. Do you recognize a sort of willingness from the Chinese government to sort of fund their response to any sort of political or geopolitical policy that either administration comes with in November?
Yeah, I think that's the key point. I think the Dutch and the Japanese are very concerned, not just for their companies that are providing that technology hardware to China, were they to be restricted. It's not just their profits, it's China's retaliation. I think Xi Jinping has been extremely clear that if a stranglehold on certain high-tech products and services continues, vis-a-vis the China market, he is going to respond. He is not, as he has said, going to sit idly by and watch those restrictions continue to expand. And so the Dutch, the Japanese, and the U.S. government have to think long and hard on the kinds of retaliatory tools China has available right now. For example, export restrictions on graphite, Caroline, to Japan, something Japanese industry desperately needs. My final point, though, would be China has to weigh its retaliation to make sure the retaliatory moves don't harm further an already very, very shaky economy in China.
Well said,
It doesn't
Amy.
have the leverage it had a few years ago.
You advise corporates, you advise non-profit clients at the moment ultimately about business and policy interests. Can you advise us and our audience about Taiwan, about some of the sentiment that seemed to be displayed by an interview of Bloomberg Business Week with former President Trump, that maybe they wouldn't come to Taiwan's aid? What does that mean for TSMC and for Taiwan?
Well, obviously, the silence coming from Taiwan is deafening here. They are not responding to former President Trump's Bloomberg interview there. Instead, they are choosing to stand by what the platform of the Republican Party traditionally has been, which is to include Taiwan in it, and to say that, of course, the United States and Taiwan have a legislatively mandated, very strong relationship that does include U.S. provisions to come to Taiwan's aid. Of course, it's up to the commander-in-chief, so Taiwan authorities must be worried. But I will say the worry is probably not severe right now because most of the advisors around President Trump, including his selection of vice presidential candidate with J.D. Vance, are very strong supporters of Taiwan. And so within a Trump II administration, were that to come to pass, there are going to be very significant conversations around how the United States continues to focus more on Asia than Europe, which is clearly a platform that we're starting to hear coming out of the Republican convention, and what that means for U.S. policy towards Taiwan. So I wouldn't be so quick to conclude that President Trump is going to abandon Taiwan in the event of some kind of conflict. That would really be going against traditional U.S. policy, particularly among the Republicans.
Amy, so important to have your expertise. We thank you. Amy Selico, Principal Analyst at Albright Stonebridge Group. We thank you. Ed, what's so interesting is we see this volatility in the individual stocks today as we question ultimately some of the valuations and where we've run to in the Nvidias and the like.
Yeah, I think what's so astonishing about the conversation we just had, detailed, but we didn't even discuss about another factor, which is the AI-driven boom, right? Growth driven by demand for AI accelerator manufacturing. TSMC has clients everywhere. And so I just wonder how, maybe we'll talk to Jensen about it in a few weeks' time, but it's like geopolitics takes away one market. There are plenty waiting in the wings to get some capacity. And I just thought it was weird that we didn't bring that up.
But then Goldman Sachs top research analyst today currently saying maybe you need to question the ultimate demand of AI in the longer term. Will it really drive this productivity growth? Great story on Jim Cavolo from some of our colleagues in Bloomberg News today. Meanwhile, coming up, Apple, we know, is in talks to license more films from major Hollywood studios. Look, it's an effort to bolster its Apple TV Plus streaming service. Being reported by Bloomberg. Stick with us. This is Bloomberg Technology. Media news now. Bloomberg reporting that Apple is in talks with several major Hollywood studios about acquiring more films for their Apple Plus streaming service, which currently features almost entirely original production. There is a lot going on in Hollywood. Chris Palmieri breaks it down for us. Let's just start on the Apple news for now. Who would they be garnering it from? Is it like relief for some of those studios right now?
We didn't report the exact names, but you can imagine sort of all the big folks in the entertainment business, whether it's Universal, Warner Brothers, Comcast, Disney, all of those players. And what's going on here is Apple TV originally had a strategy to focus really on high quality original programming. It's had some for sure hits, Ted Lasso, The Morning Show. But it's not as watched as some of the other big players in the industry, and in particular their film slate. They made a big billion-dollar commitment to make original movies and to put them at least at first in theaters as well. Hollywood applauded, but they've had more than their share of duds. Argyle, big action movie, $200 million. One I just saw this weekend, Fly Me to the Moon, nice movie, but not really burning it up. So this is a shift in strategy to try to get more library content on there and build the audience for Apple TV.
That's probably, Chris, what Netflix has, right? I was actually watching World of Warcraft the other day on Netflix, which is a 2016 film. I won't give my review of it, but that's where you go to, right? Netflix has this sort of endless catalog. How much volume dollar-wise is Apple going to have to put into this to fight back?
Numbers on Apple's program are scarce compared to some of the other operators, but we're seeing this across the industry. We're seeing both. There was originally the theory was all these streaming services were going to have walled gardens and their own content, and it wasn't going to be sold elsewhere, and that's completely broken down. Now we have shows on multiple streaming services, TV outlets. In a way, it makes it easier for consumers to find stuff, but it does devalue in a way the exclusivity of the programming.
Yeah. What continues to hurt is legacy TV, Chris, and you're out with some of that FT reporting today that maybe Warner Brothers Discovery and David Zaslav over at the company are thinking of splitting up studios streaming from the legacy TV. Why?
Well, first of all, their stock price is just in the dumps, just a real terrible performer. They put these two companies together, Warner Brothers and Discovery, with these big plans to really beef up the Max streaming business, and it just hasn't worked. And David Zaslav, the CEO, sort of acknowledged that this month at Sun Valley. He said that the industry is just going to need more consolidation. Now, whether this particular split up is the way to do that, getting a lot of skepticism from analysts. Part of the problem is that the traditional TV networks, although they're declining, and we're talking about TNT, CNN, and that, are still the cash generators, and the studio and the streaming business aren't making as much money and need the money to invest in new programming. So with 40 billion or so in debt on the books, how that's going to rationalize itself is very difficult to figure out, and that's why analysts are skeptical that this is the route. But I think the stock is up because people are applauding that the company recognizes it needs to do something different.
One for Zaslav to think about. Bloomberg's Chris Palmieri, thank you very much. Now, coming up on Bloomberg Technology, we're going to take a look at Ether ETFs and the battle between issuers that's already starting. That's coming up next. This is Bloomberg Technology.
Time now for Talking Tech. First up, Publicis. It raises its guidance. The advertising agency posted stronger growth in the first half and sees net revenue growing by 5 to 6% this year, up from 4 to 5% previously. Look, the company has announced earlier this year that it would attempt to strengthen its data analysis and artificial intelligence capabilities. That's in an effort to combat the slump in the advertising industry. Meanwhile, India's Infosys also raising its sales forecast for the year. Now, the company expects revenue to grow 3 to 4% on a constant currency basis. That's in the fiscal year through March 2025. Look, it's a sign that clients are gradually increasing tech spend, boosted by a resilient global economy. And the battle for potential Ether ETF assets is already underway, even as the funds have yet to launch. Issuers including BlackRock, Fidelity, and Invesco, they're already coming forward with how much or how little they're going to charge their respective Ether ETFs, Ed.
Okay, let's dive more into that with Bloomberg's Isabel Lee, who's one of the bylines on our reporting about it this morning. It ranges from 0.2% fee to 2.5% fee on the Grayscale Ethereum Trust, but that one has no conditions attached to it, essentially. What does all that mean? What does that tell you, Isabel?
So this fee war has been really going on for a while in this highly competitive space because theoretically, the lower your fee, the more attractive it will be to issuers. And yesterday was important because a lot of issuers filed what they called an S1, and that revealed the fees, and we went through all of them. And the fees range from 19 basis points to 25. For context, that is very cheap, dirt cheap, as some would call it. Yes, Grayscale is on the higher end at around 2.5%, but that's an exception because they're trying to launch or to convert their trust into an ETF. But all that to say, these funds are really priced at such a low fee. And in fact, a lot of them have conditions. For instance, BlackRock will have a partial waiver in the first year. Several said that in the first 6 months, it'll be free. And I think issuers really learned their lesson, because during the Bitcoin ETF, a lot of them really just lowered and lowered as each day passed and even canceled leading up to the launch. But for now, in the first get-go, they were already cheap.
I mean, I don't know if they did learn their lesson, because they're really cheap again. They're waiving the fees. They're saying you can be free for 6 months. But what perhaps they're also anticipating is ultimately less inflows this time round. The problem with ETH is that you could stake it if you're not putting in an ETF, and therefore that's an opportunity cost, right?
Exactly. We have Citigroup expecting 4 to 5 billion launch for the first 6 months in inflows. And for context, BlackRock, so that's only one ETF, hauled in 1 billion in the first 4 days. And as a whole, now it's been 7 months, but then we can see 16 billion in total for the cohort. So it's really a weak demand. And to your point, why would you buy an Ether ETF? So that's really, it's kind of a harder sell, because for Bitcoin, yes, it's digital gold, hedge against inflation, you buy it. But for Ether, the participants really want it for staking. So having it in a trust or in a fund is really a little questionable for others. So the demand is less. And also, those who want crypto exposure, the big Wall Street firms already got it in January. Yeah. And it's a Bitcoin. It's the biggest coin. It's the most stable. It's the most established. So why hedge your bets on something smaller? Although, a thing to think about is Ether is kind of the leader of the altcoin world. So this may pave the way for smaller altcoins. Who knows? We already have our Solana filings, so
yeah, there's much questioning around Solana. And ultimately, the question around Solana is because what does the SEC view it as? Yeah. And I think this is the issue with the staking, right, is the SEC is just not comfortable that it ultimately isn't a security if you're able to put it aside and raise funds and yield on it.
A lot of issuers already made concessions. They removed staking because this raises into a question, is Ether a security? So they really had to compromise on a lot of things. But then if you still ask the Ether bulls, they're just happy that there's going to be an ETF out there. It's, a major milestone in the crypto industry, second milestone. So there are pros and cons to it, but it's definitely a landmark if you would think about it.
Slowly but surely,
yes.
US catching up with Europe and giving access to these sorts of products.
And Canada.
And Canada, well said, Isabel Lee, with all the take as we look towards what could be, of course, that ETH ETF going live as soon as, well, Tuesday next weekend. What have we got coming up?
We're going to be joined by Precision co-founder Teddy Goff for his take on Donald Trump's VP pick, J.D. Vance. Real quick, looking at shares of Nokia, telecoms market participant, formerly my first ever cell phone, down more than 5% over in Finland. They just posted their lowest quarterly sales figure going back to 2015. It's competitive out there, and it's a tough market in 5G and in telecoms. Stay with us. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. A very quick check on the markets, big picture. The Nasdaq 100's at a session low this Thursday, down 0.8%, 1%. It's been an interesting week so far, 4 days in. On the last 24 hours, on a two-day session basis, the Nasdaq 100's on track for its biggest two-day drop since October of 2023. A lot of that was the Bloomberg Business Week interview with former President Trump, the impact it had on the chip sector. In the session right now, it's the mega caps that are leading declines. We've noted that within that, some of the semiconductor names are moving to the downside as well. A lot of sort of lingering themes, I guess, Caroline. And I'm just focusing on that because, honestly, the chop trading, which you kind of see with that little squiggle on the far left-hand side of the screen, has been hard to gauge in this morning's session as alone. There's one kind of news story as well that's been moving two specific names. Shares of Ray-Ban maker EssilorLuxottica are popping on a report that Meta is exploring a stake in the company. The move follows an existing collaboration between the two companies to produce smart glasses that play music, take pictures, and use AI to answer questions. Now, on Meta's last earnings call in April, CEO Mark Zuckerberg said the company's approach of partnering with leading eyewear brands will help them serve customers looking to use wearable AI with a variety of designs. We're going to get more information on Meta's progress in that field when the company reports results at the end of the month. But I think Zuckerberg gave us a bit of a hint in April, Caro, that makes the story out this morning not that much of a surprise.
We'll see how it continues to evolve with that particular European stock. But look, let's just stick with social media, Ed, because, look, what is the probability now of a TikTok ban if Donald Trump wins the White House in November? Well, some analysis has been done by Bloomberg Intelligence, crunching those numbers in its latest report. And I'm pleased to say we're joined by senior technology analyst Mandeep Singh, who sort of went through the tea leaves of what was being written in the Bloomberg Businessweek story, that interview with President Trump, former president. And ultimately, it feels as though maybe he's less against TikTok, but because of Meta and because of US companies.
Yes, and look, his views are pretty clear, even though they have changed since the time he was in the White House to where they are now. But at least he has said it clearly that he doesn't want to ban TikTok. And because his ratings have gone up, I mean, we are in an environment where, you know, every day the poll ratings are changing. And I think right now the market is behaving as if Trump was to get elected, and he is against the ban, even though the law has been passed that TikTok needs to get divested within the next 1 year, or it will be banned. So clearly the market is saying otherwise, because Meta has gone down, Snapchat has gone down, and the stocks have reacted that you know, the ban isn't going to go through. And look, he's driving the campaign through TikTok. I mean, Trump is on social media, on TikTok. That's the one thing you wouldn't have expected. So he's getting a lot of donors to his campaign from TikTok. And we know the swing voters are probably on TikTok. So he can appeal to those TikTok users by telling them, hey, we are not banning this platform anymore.
Truth Social, yeah. TikTok. Who would it ultimately affect the most in terms of market capitalization, in terms of user figures, if indeed TikTok stays around? Has it got to be Meta, or are there others? Yeah,
so our initial analysis was TikTok has almost, you know, 1/3 of the US adult users, more than 60% of people under the 30 age group, and they spend almost 80 minutes a day.
Where do they have the time?
They apparently do. But the thing is, if TikTok was banned, then, you know, platforms like Snapchat that has a lot of video content, short videos, YouTube Shorts, Instagram Reels, they're the three that will benefit the most, because that 80 minutes will get split into, you know, wherever people can spend their time, even Roblox or Netflix, because at the end of the day, it's a zero-sum game.
Well, they're not just going to talk to people in real life. They're going to find a different
I think that's where they consume all their news and all their content. So they'll spend time on social media. Question is, where do they do that? Yeah.
Manny, this is your research. It focuses on TikTok, but you note that the public comments by former President Trump about his kind of logic that if they ban TikTok, it kind of opens the door to Meta and its wide range of properties being all-encompassing. Kind of explain to us your process, how the sausage is made, so to speak, but also, I guess the next research coming from you is the risks to Meta if Trump were to end up in the White House.
Yeah, I mean, look, the antitrust risk is there for all these large platforms, and specifically in the case of Meta, given it owns, you know, 3 of the most popular websites where people spend most of their time, and there's always been that concern against divesting any of those platforms. So clearly, Meta is the most exposed on that front. But I still think, you know, when it comes to Trump, there's always volatility and uncertainty. You know, even the TSMC comments, like the whole Silicon Valley supported him, and now you're hearing, you know, the comments around TSMC. So there's always that uncertainty associated with, you know, President Trump, and it could change. The opinion could change, you know, a few months from after he gets reelected.
If he does indeed. Mandeep Singh of Bloomberg Intelligence, thank you so much. And look, maybe it's not just the words of Donald Trump, but also his new running mate that are being passed at the moment, J.D. Vance, and his ties to Silicon Valley and venture capital, drawing praise from some in the community. Take a listen.
I had a fantastic experience with JD. I worked with him for about a year when he was just starting out in Silicon Valley. He's going to be good for Silicon Valley. He's going to be good for the country because he is pro-growth, he is pro-innovation, and he's also pro-eliminating those regulations that strangle industry, that strangle growth.
Let's get the take of Teddy Goff, co-founder and managing partner at the strategy and marketing agency Precision, which advises world leaders. But you're also the digital director for President Obama's re-election campaign, so we can garner some of a political affiliation from that, Teddy. And I want to get your take on what it means to have potentially a venture capitalist in the White House. How much do you think that there will be real changes to policy making for innovation of small companies?
Well, thanks for having me. First of all, I think the most important thing is whether there is a change in administration or not. Obviously, as you were just talking about in the previous segment, when it comes to former President Trump, potentially future President Trump, there's always a degree of volatility, uncertainty. There's always palace intrigue. It's not exactly clear that his vice president is going to have all that much influence over him. Certainly, his first vice president did not. But I think it'll be broadly good for much of the tech industry if J.D. Vance becomes vice president. He's sort of that community, or at least in the past few years in his career, and he shares some of their interests, I think, particularly with respect to deregulating AI and cryptocurrency. I do think it's worth keeping in mind that the tech industry is non-monolithic. There are deep divides within the tech industry, and by definition, the Republican Party isn't in lockstep with them on all of those issues. So, I think when it comes to deregulation, tax policy, AI, cryptocurrency, there is, some degree of consonance between what a J.D. Vance wants and what much of the tech industry wants. But when it comes to Section 230, privacy, even competition to some degree, they're going to be at odds. And so, I think this is going to be good for the tech industry in certain ways and, bad for them in others.
Teddy, good morning. It's Ed in San Francisco. Let's talk a little bit about TikTok. You just heard our analyst, Mandeep Singh, outline a thesis. Not just as a means of political communication, but a point of policy. How much do you think the American voter cares about TikTok, what may or may not happen in either outcome? 170 million Americans use TikTok, and we always say on this show that many of them that use it quite like it. And so I just find that interesting. It's a world and I wonder how critical you think it will be in this presidential election cycle.
The reality is that, we're a country where you have essentially two options as to who to vote for, and you've got dozens of issues upon which to assess those two options. So it's difficult for any individual issue to change people's minds. Even abortion may not be a decisive voting issue for all that many people as, kind of dominant in the culture as it is. That being said, elections in this country tend to be won on the margins. There are certainly a lot of young people who don't want to have their TikTok taken away from them. It may impact some of their votes, but again, they're looking at all of these issues and this, kind of unprecedentedly deep divide between the, between the two parties. And, I think there probably aren't all that many for whom this would be the one issue that gets them from one side to the other. If there is, though, I think it's going to benefit Trump, because, these young people who love their TikTok don't want it taken away. And he's the one guy saying not to do it.
And also using it. And I'm interested as a digital director and former life and still advising with Precision. How much should you be leaning into various parts of the social media spectrum right now? How much also have you got to be thinking about artificial intelligence muddying the way in which individuals consume that content?
Well, I think every candidate for office has got to be on social media. And I think putting to the side whether you do or don't assess TikTok as a national security risk, and obviously that's a tough thing to put to the side. It's an absolutely critical communications platform, as you were just saying. It's where almost all of America's young people spend their time, a huge amount of time. They're not necessarily there for news, but they're going to get news while they're there. And more broadly than just political news, they're going to get cultural information. It's going to shape what they think about, the culture wars writ large. And so, Democrats, Republicans too have to play there. I think, though, the truth of the matter is that no individual account is going to be able to get that much traction on TikTok. That's just not how the platform works. And there's too many creators, too much content, and too many people spending too much time. So,
Teddy,
the question, I think, is more broadly than just, one account. How can political movements generate lots and lots of voices that, that can accrete to lots and lots of, eyeballs upon their point of view?
Teddy, you advised Obama on social strat in his re-election. The weekend's events, the assassination attempt, showed the risk of social media, the spread of misinformation. Does either campaign have a handle on how to use it safely?
Well, my opinion, of course, is that one of the two campaigns has no interest in using it safely, and I don't want to come across as a hyper-partisan, but I just think there's lots of evidence to that effect. I think. The truth of the matter is, I think that disinformation is really, really hard to counter. And there's been lots of academic research into this, lots of, political experiments done, lots of corporate experiments done. You can try fact checks, you can try, warnings, you can try, all the various sort of disinformation mitigation techniques that are out there. And the fact of the matter is, it's still powerful. And once it's out there, it tends to sink in people's minds. And more broadly, it tends to just make people question what is and isn't true. And I think the consequence of that is they tend to believe the things are true that they want to believe and disbelieve the things that they don't want to believe. And there may not be great ways to counter individual pieces of misinformation. So what you've got to do as a campaign is just try to get your story out there as best you can. Yeah. You can't playing whack-a-mole with different pieces of disinformation. They're just too hard to counter. You've just got to have the most forceful, effective, proactive message you possibly can, and obviously hope that is to to kind of overcome the effects of the disinformation that you're going to have a very tough time countering.
Teddy, we're out of time. Teddy Goff, co-founder and managing partner at Precision. Thank you. Now, coming up on the show, we're going to be joined by Chan Tang, founding partner of the Berkeley Skydeck Fund, to discuss the future of Silicon Valley and global startup cultures. Coming up next, this is Bloomberg Technology. For today's VC Spotlight, let's talk about startup culture with Chan Tang, founding partner of the Berkeley Skydeck Fund, which has $85 million under management and supports entrepreneurial activity through Berkeley Skydeck, which is UC Berkeley's largest and most prominent accelerator. We're familiar with accelerators here in the Bay Area, here in San Francisco. Y Combinator, Jason Calacanis has a similar organization. And we are familiar with Stanford grads, GSB, going into tech. Let's start with, let's say we're less familiar with what Berkeley's doing, but it is massive, the volume of startups that you are founding and supporting.
Yeah, Ed, I want to say I'm extremely excited to be here and share a little bit more about what we're doing. At Berkeley, what we've come to realize is that we have a platform that's a little bit different from what you would expect. At first look, you would think the official incubator platform for a school is meant to bring out the talent and the technology from campus. About 6 years ago, we had this amazing insight that what we want to do is turn our entire ecosystem into a giant platform to build companies in general. So our doors are now open to founders around the world. Okay. We're not only inviting our own students, but folks from Europe and beyond.
Interesting. Now, put into context, therefore, the amount of companies that are being birthed, where they're going on to, follow-on funding, because the statistics are really pronounced.
Yeah, I think that's exactly right. So early stage investment is an extremely challenging thing to do. We have 4,000 plus companies that are choosing to apply to us every single year. We're an extremely exclusive program. Only 1% of the 4,000 that apply are being picked. Of the 40 that we then invest in, only 20 will raise from institutional investors. Of those, only 10 will go on and raise A and beyond. We have a giant portfolio, though, of 200 plus companies that we've invested in, and on the screen what you see are some of our huge wins.
Last summer, Gary Tan came on the show and talked about the Y Combinator S23 batch. And it was interesting because they made it mandatory to be in person in San Francisco for that class onward. Do you have any similar rules? You talked about attracting talent from outside of the Bay to the Bay. What is the point of attraction?
Absolutely. Let's talk about why a founder wants to come to us as opposed to YC or to one of the other brands that you have talked about. Berkeley is all about giving them introductions to the ecosystem here through our grads, our students, our alums, our faculty. So when they're in person here, the exposure that they get to the top corporates, to the top investors, is unheard of. So what we ask is that they are here in person for most of the 6 months. They live here and they work here. In a lot of cases, they even move their families here.
Let's just talk about the wins and what industries they're shaking up. I mean, I'm going to take a wild guess that artificial intelligence is pretty prominent in some of the current intake.
You're completely right, Caroline. What we've seen from venture as a category is that AI is changing all of our lives in an amazing way. It's a disruption. When you're a VC, that's what you want to see. You want to invest in the industries and the products that will change all of our lives over the next 10 years. So we are extremely excited about all of the products that will come out in that category. About 2 years ago, we were very early to that game. About 10% or so of our portfolio back in 2022 fell into that category. Now in 2024, 90% are in AI.
Chan, it's great having some time with you. Chan Tang, founding partner of the Berkeley Skydeck Fund. Keep an eye out for some of those companies coming out. Meanwhile, Indian mobile content provider Glance is in advanced talks to raise as much as $250 million in a funding round led by Google, according to sources, though the fundraise isn't finalized yet. Now, the move would increase the tech giant's bets in the world's most populous countries, so more private market moves there, Ed.
Yeah, some more global news coverage coming up on the show. OpenAI just launched their latest model, the GPT-4o Mini, a smaller and cheaper version of GPT-4o, which was released in May. We have all the details on that next. This is Bloomberg Technology.
Today, another announcement from OpenAI, the debut of GPT-4o Mini. Now, it's their newest model. It's smaller, it's cheaper, variation of the GPT-4o, and the company's most powerful model yet. Basically, it's replacing the older one, GPT 3.5 turbo model. Let's bring in Bloomberg's Seth Friedman for more. And look, Seth, yay, cheaper, smaller. I mean, is it all about a race to being the most accessible at the moment?
Yeah, I mean, I know it's super exciting. This is not GPT-5. This is not some breakthrough model. It almost feels akin to smartphone manufacturers releasing a wider range of pricing tiers. This is designed to appeal to a broader mix of developers and business customers who may not need the most expensive, the most robust, the largest large language models. But it's not going to, change the world at the moment with the breakthrough.
Seth, when I hear GPT-4o Mini, my brain just goes straight to iPod Mini. I'm never going to be able to get over that. OpenAI always introduces these kind of latest models in interesting ways. I think people get some early access to it, right? Sometimes journalists, sometimes developers. Have we got any feedback on how it's working and what it can do?
Yeah, I mean, I think a couple companies got access to this, and we heard that it's being used to kind of go through receipts and pull out, interesting, actionable information or help to respond to emails. But again, this is just going to feel like a bit iterative from what we know that's already out there. We have not personally used it yet, and I think it's really important to also note that this is a smaller version of a model that largely is not released yet. The most high-profile features from 4o, the ability to process audio and visual information in real time, are really not out there yet because OpenAI is working through safety issues. So it's a smaller version of a largely unreleased prior model.
And of course, there was a fair amount of backlash after the previous announcement. Sky, for example. Where are we on all of this?
Yeah, I mean, we're still waiting for them to sort through it. I think they've changed the voice in that particular one that you're referring to, but right now they're still doing a red team safety review of the larger 4o model. Our understanding with the smaller one is it will eventually have many of the same features, but as it stands today, it's still a work in progress.
Seth, we love it. Thank you very much for joining All Things 4o Mini. The numbers and names keep evolving. Meanwhile, we're just going to take a check-in on the market, aren't we, Ed? Because, look, we are taking another hit today.
Yeah, end of the show, but the NASDAQ 100's down almost 1% on a two-day basis, its biggest two-day drop, going back to October of last year. Recurring themes. Former President Trump's comments to Business Week, concern about the chip sector competition, the US and China. I think it's a story that will stay with us, Caro. From New York City and San Francisco with a pretty ugly-looking stock chart on the screen. This is Bloomberg Technology.